Eric, why don't you give us the fundamental look on Citi?
Yeah, sure. Based on some pretty good results today from Wells Fargo and JP Morgan Chase, we expect that loan growth will be positive in the second quarter, and we expect 95 cents earnings. And then as far as like the legacy Citigroup, we expect further wind downs of the Citi Holdings portfolio and the mortgage repurchase liability. We expect some stability in that portfolio. I don't think it's going to be overall as spectacular a performance as Wells Fargo was today or JP Morgan, but we expect something pretty good on Monday.
Well, what's curious about JP Morgan, we found out that loan growth was up about 35%, and yet we found out that investment banking fees were down about 33%, almost an offset. So it sounds like you're kind of thinking the same about Citi.
Yeah, I think with Citi, we're thinking that the loan growth should be pretty good. And investment banking globally is going to be very weak, likely for this year. So the retail consumer banking has to step in and contribute more to the revenues.
Yeah, right. Obviously, a weak investment banking, certainly no surprise to anyone who's involved with the market. All right, Bill Maloney, make sense of this chart for us. Not entirely pretty, is it?
No, financials are clearly rallying today on JP Morgan and Wells Fargo. But in the case of Citigroup, the charts really aren't that attractive yet. It's been this long-term downtrend since January 2011. That's intact, roughly below $34 a share, and it's still trading below its major moving averages. Now, it does have support around 23, 24, so that's kind of the bull case for the stock. But overall, the charts still aren't that attractive.
All right, chart not attractive, but I tell you what, Scott Bauer, jump in here and make sense of how you're playing this thing with options. We've got a fundamental analyst who is somewhat positive. We've got a technical strategist who does not like it. What's your take?
My take is, and this was before the JP and the Wells Fargo news today, is that Citi has a pretty bright future going into the third and fourth quarter. Not so sure coming out of this earnings report, but going forward, yes. So what I want to do, I want to sell the August 26 put. Against the August 26 put, I financed that to buy the October 26-29 call spread. So I'm buying the 26 strike in October, selling the 29 strike. I can do that whole package for about zero. It doesn't cost me anything. So what my downside risk is, I really look at support in Citi around the 25, 25.10 level. That to me is my downside risk. If we get down there, I want to be long the stock. But like I said, I see going into the third and fourth quarters, I definitely see a 15 to 20% uptrend in Citi, which being long that October call spread, that to me is the key in this spread.
Let me jump in here for a second.
Yeah, jump in here.
I totally agree with Bill. You know, the charts are looking very weak, and I was on with Bill the other day. We were talking about JP Morgan, and you know, I don't really personally like Scott's strategy because this isn't the kind of environment I want to be selling puts naked. You know, if I was actually in this trade, you know, maybe I'd buy a downside put. You know, the 23 puts. You know, I like the call spread versus a put, but I don't want to be selling puts naked. So if I did sell that 26 put, you know, maybe I'd buy the 23 puts just for protection. You know, I don't want to be buying stocks, as we talk about later, as volatility goes up, as the market goes down. So if Citi spikes back down, these puts are really going to explode to the upside.
Well, actually, all right. So I don't want to make this pick on Scott, Dave, but Scott, you're a trader. You're no stranger to being in the pits. You're short a put, and yet you're long a call spread. So you can only make so much if this thing goes up, but you actually get hit if it goes down. So why is it you're
absolutely?
Yeah. Why is it you're structuring the trade that way?
Because I really see the 25, 25.10 level as major support in Citigroup, and I am willing to dip my toes in the stock, get long the stock at that level if we drop down there. So by being short that August 26 put, if we do happen to drop down there, I'm willing to take that risk. If we drop down and the implied move for the move off of earnings on Monday is about $1, and Andrew, you'll know this, if you look at the front month straddle and the front month strangle divided by 2, we're looking at just about $1. So if I get back down into that 25.10, 25.20 level, I'm comfortable being long the stock. Now, obviously, if we fall out of bed from there, I'm going to have to do something to protect myself. But that's a point where I want to be long in the stock. And if we just kind of stay status quo, or if we do have this 15 to 20% bump going into October, which I see, then this whole thing financed for a cost of zero, that to me is a great trade.
Eric, final word to you. If it trades down on earnings, are you a buyer?
Yes, I'm a buyer. And I think that expectations are very low. I see it trading at about 6.5 times forward and about half of tangible book. That's very low.
All right, gentlemen, thanks for joining us. We appreciate it all the way around here. Full circle with Andrew in the house. All right, with a few minutes to trade City ahead of Monday's earnings, here's the cheat sheet. Eric Oja rates this one a buy. He's a buyer if it trades lower. Bill Maloney says technicals don't look so good. And Scott Bauer, he's playing it with a bullish call spread. He's also short puts. He would become a buyer lower as well. 3 ways to play it. There you go, Alex.